I don't know how many times in this series I'm going to say Tesla is down again, nearly 14% in the last 5 days. Year to date, Tesla is down 41%. It's absolutely ridiculous. So there's no surprise that TSLY is also down 12.7% and is down 44% year to date. And if we have a look at my TSLY fund, we are down 9.3%, not as much as TSLY, down 12.64%. In kind of a year-to-date perspective, if I'm including dividends, I'm down 30%. If I'm not including dividends, around 40%. So very similar. And again, these are things that we talked about in this series, that if the underlying Tesla is doing poor, then the synthetic fund will also do poor. We'll also go into last week where it just abysmal, broke down this support line here with the gap down and all these good things. So we'll have a look at that. We'll look at all the moves that I made, how much money I made, all these good stuff. And if you like the sound of that, all I ask for is that you smash that like button and don't forget to subscribe. So we mentioned we're down roughly 9%, down 30%, 40% respectively year to date. And if we have a look at how much money that I made, I'm now up to 6.8K, which again, this strategy does still pay me the income, even though we've had a fund that has been dropping, or the underlying has been dropping. We still have able to generate some cash flow. And again, if you look at this, it's still not bad really, between $300 to $500 every single week, getting paid around 1.5 to 2 and a bit percent of the initial capital. So we are now at $57 a day, and our projected dividend is just under 21,000, so 69% return on capital. So if we just have a look at see what we happened on Friday, the moves that I made, right? The 170 covered call, and Tesla's trading at 147. I should have rolled the call down, but because I'm doing weekly options, there's not a lot of premium left inside these options when these big moves happen pretty quickly. And you can see here, I bought this back, took $2 in terms of buyback and commissions. So 486 was the overall piece that I got paid for last week, which again was 2.12% return. So then what we did is that we sold the 157.50, where Tesla's currently trading at 147.05, and again slightly higher, around $10 out the money. And again, not bad premiums at 344, again, because they do have earnings next week. So again, if we do get any sort of a move going upwards, that's going to bode well for us in terms of trying to recapture some of price appreciation and also the covered call premiums. Where I got stung was the synthetic. So if we look the week before, where Tesla was trading at around the 178, 179 mark, and you can see that it went completely against us, because I decided not to sell the synthetic. I decided to keep it for another week. Partly wish that I sold the synthetic, to be honest. So when I was up like $500-600, I took a $1,700 loss in terms of that synthetic, and I couldn't really keep it at the 167.50. A, because it was expiring this week, but also the premiums wouldn't have been that great if I did. So what I decided to do was re-establish at the 150 mark, with Tesla trading at around 147. So I'm currently $3 down on there, so around 295 down on the current position before we go into the current week. So again, like I said, it's unfortunate, but 30% down, 40% down without dividends. And again, if we just look at year to date, it's roughly the same, like as if I just held the stock. So I've managed to bring in some income during this time, which is good, and starting to slowly pay back some of that 30k, which you can see here. The current dividend rate is 69% of the initial 30 grand that I'm in there. And again, in terms of the stats, in terms of the synthetic, is down 12k, a 3k covered call income, nets you out at 9, and then that's what gives you the return on investment that we're currently seeing at the moment. So if we head over to the charts, you can see here, if I zoom in, we were kind of topping off at this, I would like to say, this kind of range level. Oopsie daisy. There we go. Yeah, so we were kind of inside this range, just bouncing in and out of the range. We had the pivot there, and it just kept going down. There were a number of reasons. There's macro factors such as the potential World War III that's going on behind the scenes. I won't go into that too much. And then also Tesla said that or Elon Musk announced that they were going to cut down their workforce by 10%. Generally, when you see workforce news, that kind of sends the stock price up because you're cutting cost out of the business, therefore profits rise, all these other different things inside there. And so we've had like two things here, two gap downs here. If we look at it on the weekly, you'll see this pretty apparent that, it was a straight move down, and we pretty much, where was the low? The low was 146.22 and we closed at 147.05. So a very, what they call a Marabou candle, a very bearish Marabou candle there, which, I'll be honest, doesn't really paint good picture for Tesla. Now, as I mentioned, we've got earnings expected or at the end of the bell on Tuesday, and everyone is thinking that Tesla is going to report horrible numbers, which they probably will, but the market already knows this. So if Elon or the team start giving any indication that margins are going to get better, or what's happening with the Cybertruck, all these good things, this could skyrocket the stock if they give any glimmer of hope. Because again, if you think about it, this stock is already down 40%, and we're only 4 months into the year. So how much lower can it really go? Yeah, that's all I'm really going to say on that one there. Again, we've got the missed pivot over here at the 172. We've got the current pivot estimated at being at 156, 157. My cover call strike is slightly above this with the synthetic here at 150. So if we get any move to the current pivot, that's going to get the best of two worlds, of where I can capture some appreciation as well as, capturing all the juice of the covered call as well. So pretty excited to see what happens in earnings, if I'm really honest. And again, anyone who's looking at the technicals, we can see that we're making lower lows. And if I zoom back out here, you can see the RSI is pretty flat. We're not even making lower lows, it's pretty flat. So again, that gives you some bearish divergence of where we expect the stock to go. But again, you do have earnings, and I don't think the market cares about the RSI. And then so again, but for those who are looking at it from a technical perspective, the last 3 times we've kind of been in this kind of area on the hourly. But look here, we've seen a move up. We've seen here, we have seen a move up. It's on the short term. So again, if history is any indication, anything that we get inside this bearish territory, we do kind of see some sort of a pullback. And the thing is, what I find quite interesting is the aggressive nature of the move. It's a very steep downward move, similar to what we had here, a leg up and then down again. So again, we might see some of that, and then we've had the little pushes up, but they've just been minor pullbacks in terms of a longer term trend of Tesla violently going down. So again, this is something that you might want to consider, actually owning this stock as part of your portfolio. This is something that I'm looking to do. I've got some put options on here at various prices expiring in the next couple of weeks. So you never know, I might be looking at becoming a proud Tesla owner in terms of the shares. So this is all part of the plan. I think the bottom is somewhere near here, around the 140, 130 mark at the latest. Because again, I just don't think I do think margins are going to improve at the back end of the year. So I do think we're getting closer to the bottom. I don't know where that bottom is. I reckon around the 130 mark at the lowest. So let's see what happens. And again, as part of this, just keep selling covered calls, still keep bringing in the income. And again, these numbers don't pay for pretty reading, but again, we're still projected to make 20K. So if I can make 20K on a 30K portfolio, then again, that kind of puts me at a good place in terms of, being only 26% down, as opposed to this whole 40% down. So again, I hope you've enjoyed this video. Again, if you've got any questions to hit, let me know down below. Hit like, hit subscribe, and I shall see you guys in the next video.